Kevin, let me add to the equation in terms of the Canadian economy. Of course, oil and the falling loonie is part of the equation, but the other is the housing market. You've got a lot of U.S. investors, maybe not a lot, but certainly people look at Canada and they want to short the Canadian housing market. In particular, we've got concerns regarding Home Capital Group, that there's been a pullback in mortgages for subprime lending.
Yeah.
What do you make of all of this?
Well, Catherine, let's say you were a real estate investor in the Canadian market over the last, say, 5 years. You took money out of Russia. You took it out of Germany. Germans are huge in our commercial real estate market in Canada. You invested in a Canadian REIT in Canadian dollars. You've already had a massive correction. If you brought it in any other currency, you've been slaughtered. You're down 20 to 35%. So that's already been a correction in Canadian real estate. Now, on a local market basis, you're bringing up a valid point. I don't see a big collapse here. I just don't see any capital appreciation. This subprime, or as they call them, entrepreneurial mortgages, banks are protecting themselves. Lenders are protecting themselves. They're saying, if there is a correction, let's say 10 or 15%, I want to lend less to someone who doesn't have security of cash flow. I think that's perfectly reasonable. They just force them to have more equity in their mortgage, that's all.
But do you think that there's any similarities between the subprime market that I lived through in the United States and what we have here? It seems as though everybody says, no, I want to do more digging and understanding truly what the subprime market looks like here, but from your knowledge...
No, there's no similarity.
Really?
I was very involved. First of all, the structures that were lent out had no securitization against the asset itself. It was so far away from the actual home. Plus, the actual borrowers had zero equity in their homes. The way it was structured...
Zero down. Sometimes it was just interest-only
Exactly.
loans.
In Canada, you don't get to do that anywhere. I mean, we're Canadians. We're conservative. Most people have 10 to 20% in equity, and if you're an entrepreneur, you might need 30, 40% in equity before you can borrow, which goes to the point that I think is reasonable these days. Why not rent for this cycle? Why not rent for the next couple of years and just wait and see what the outcome looks like? Rental market is much safer. Why put yourself in debt situation if you're a young person?
Right.
You know?
I know, you said that. I think it's interesting advice from millennials.
A spring chicken like you should rent.
All right, we both know I'm not a spring chicken, but thanks. All right, Kevin, good to see you.
Thank
you
you
so much. That, of course, is Kevin O'Leary.